Good morning. We'll give everybody an opportunity here to get on. A lot to talk about. MLB trade deadline. Peace in Iran. Maybe. Big data week. First full week, first full week of August. Awful lot to talk about. So let's sort of get it started. Overnight, stocks missed. Well, maybe both. Stocks mixed in Asia. Europe mostly up, indicating up here onshore about a point on the futures. VIX is up slightly. Bitcoin down. Story of the morning. Brent and crude down 5-6%. Crude under 80 again. Brent approaching under 80 again. All of this because of, and I don't even know what you want to call it, renewed optimism, another deal, whatever it is. We sort of extended the ceasefire and supposedly we have a deal. Let's see what some of the most recent talk is. Trump says Iran deal imminent. Planned strike would have been the largest, but they didn't do it. Trump announces he's halting strikes, but then 2 hours ago, Iran denied it. This back and forth. An hour ago, Wall Street Journal posts, did Trump finally find an off-road for the Iran war? I don't know. What I do know is, and we've talked about this sort of ad nauseum, I think it's a reasonably fair conclusion to arrive at that we're probably closer to the end of this than we are to the beginning of this. So one would be, what's the word I'm looking for? I mean, there could be so many. It would be reasonable for one to conclude that we're almost there, is what I'll say. I don't know how reasonable that conclusion is or isn't, but heck, we'll pretend for a second. MBS loves it. Up maybe 6 to 10 ticks, maybe 13 in the hottest coupons. What does that mean? I mean, not a hell of a lot. We closed the week essentially at the 5-day lows for most coupons. Certainly 6 coupon, we're back to full-on lock. 6.5, not full-on lock, but we're at fair value, reasonable value there. 5.5 coupon and below, which means 6 1/8 note rate and below. I don't know. There's a hell of a lot really to talk about there. We've got to rally quite a bit more to really begin to feel good about that. But nonetheless, hold on, just responding. But nonetheless, better than where we closed the week. There's absolutely no doubt about that. We've been sort of lengthening our position a little bit around some of these worst levels. May take some coverage here. Seth, we're going to let it sit a little bit. For those of you that are in the cap markets end of things, we started rolling some coverage last week where it made sense. In other places where spreads or drops, I really should say, widened, we kind of held out. The idea here is if rates rally a bit, we're likely, those drops are likely to tighten again. So let's talk about the week ahead, guys. We've got ISM manufacturing, in most people's opinion, the less consequential of the two ISMs, dropping at 10. We have some car sales numbers this afternoon, S&P. Tomorrow we're going to have JOLTS at 10. Almost everything this week seems to happen at 10, other than ADP and non-farm. Um, on Wednesday, obviously ADP 8:15, so we'll be on a little bit early that day. ISM manufacturing, which we're going to really want to keep an eye on, depending on how ultimately this early data goes. And just to digress for a moment there, the thought is, and well, actually, I'm going to digress from a digress for a second. What does Friday at, I don't know, call it 10 o'clock, right? After we've had the ability to digest non-farm, what does the market look like if we have an incredibly weak WEAK, weak WEEK of data, right? And we're still fussing about with Japan. We talked about this. So pre-open, we talked about some yen manipulation on Friday, and that really manifested itself as the day went on and sort of led to that sell-off. So what happens if we turn our attention? So in its, boy, I'm all over the place here, but in its most simple form, right? In theory, all we care about is the data. Monetary policy, which, as far as I'm concerned, shouldn't exist. They should mind their own business unless they absolutely must. But more on that in a minute too. I mean, we're gonna go down about 63 rabbit holes here this morning and try to do it quickly. If you're not live on this one, I want you to hang on and watch this, really the full thing on replay. We're going to talk about baseball, everything, and by the way, drop in the comments here what you think about the trade deadline if you want, what you think about the Scooble deal, because I'm going to talk about that and how it relates to some of these markets, at least psychologically and stuff like that. But what does this look like Friday morning, 10 o'clock, 10:30, 11 o'clock, 4 o'clock in the afternoon, pre-close, if the data is weak, right? If we do have peace with Iran, I mean, it's done. Right? I mean, everybody, big press conference, they're hugging. And we then turn our attention to a currency war. Morning, Steve. And war is a big word, but okay, we're trying to prop up the yen. Well, that sounds great in a vacuum until what? Until, the lira becomes undervalued before pesos all of a sudden go, parabolic, like this is, folks have talked about QE infinity and all this other stuff. It's almost like when you watch these Marvel movies and they talk about the multiverse, and you can't do this here because it's going to have this sort of impact, in all these time travel movies, and talk about you can't, meet your future self or whatever. It's like there's the unintended consequences of all this manipulation of the economy of currency. And so, I mean, this is potentially the latest thing that we have to contemplate and deal with. If we forget about that for a second, boy, you are starting the week, in my opinion, on a high. We've got a full complement of data that I think that the odds are on favored are for that to be weak or weaker. Then you have a potential peace deal, dropping oil prices. I mean, I could build a pretty neat and clean path to a 4.3, 4.4 handle on tens, to a 100 handle on Ginny 5.5s and Fanny 5.5s. There are several crystal balls that could predict that. And I think that that's the most likely outcome. 65, 70% chance that we have bad data, that we continue to march in the direction of peace in Iran. I think there's fatigue there from the White House. I feel like there's been a kinder, gentler president regarding Iran in the last couple of days, last week or so, because he wants it to end. But then again, who knows? So let's hope that this Japan currency situation doesn't doesn't get too crazy. So, Frank, to segue real quick, and believe me, there's a reason for this, although I do enjoy ranting about baseball and sports. There's an old saying in business: show me someone's incentives and I'll show you their behavior. And everybody's calling for a lockout and all this other stuff around the Dodgers. And here's what I have to say about that. I have zero interest in complaining about what their payroll is. Spend $1 billion if they can. I am a free market economist. Not that I'm actually an economist. To buy a big market team, they had the wherewithal to do so. And they want to win, spend $1 trillion. And if you don't like it, you spend $1 trillion. Here's the but. And this is just a massive miscalculation by Major League Baseball. Show me someone's incentives and I'll show you their behavior. In the desperation to sell the team out of bankruptcy way back when, and I really don't remember all the ins and outs, nor did I care to really fully investigate it this weekend. But my guess is probably because they were worried about image and all the things that really they shouldn't have been worried about. They cut an absolutely sweetheart deal with the Dodgers. The Dodgers aren't paying tax on their TV revenue until some ridiculous date like in 2040. Saves them about $70 million a year. What do you think they were going to do with that $70 million? Honestly, right? They were either going to pocket it and therefore drive down the market, or they were going to spend it and therefore drive up. I mean, like it's QE, right? Irrational exuberance. And then they allowed the Dodgers to cut a ridiculously unprecedented deal, not in the best interest of baseball. Most players wouldn't take it. Most teams couldn't do it. And defer 98% or whatever of Ohtani's salary. That's what got us here. The bad behavior of the MLB, the desperation to save face, the greed to put Ohtani in a market that they perceived, and probably rightfully so, would have been better than, say, New York or anywhere else to build, I'll say the Asian market. I'm not sure that the contemplation is just Japan, right? And here we are. We're going to probably lose baseball next year because why the heck would the Dodgers not make this deal? Now, I don't blame the Dodgers for the Skubal deal. I blame all the other teams for not beating it. And to whatever extent the excuse is that they can't, nonsense. The Brewers haven't won a World Series, I think, ever or whatever. I mean, at some point, you've got to pull the trigger, and they didn't. So, and I blame my Yankees for allowing this to happen, complacent on Boone, complacent on Cashman. Bringing in Nestor Cortez in game one has just set off a domino effect that I don't know that we can get out of other than a work stoppage. And what are you going to do? Are you going to unwind the TV deal? It's all preposterous because the Dodgers could go on ad nauseum and a salary cap isn't the answer. And here's my tie-in. Just as manipulation of the yen, manipulation of monetary policy doesn't matter. The unintended consequences of this stuff, go on YouTube, type in Milton Friedman unintended consequences, and he's going to talk about a lot of the ways that we've gone wrong in the history of the U.S. economy by trying to manipulate monetary, economic, and behavioral policies. I don't know. So what does that all mean for us? Well, to whatever extent that I believe that there's going to be peace in Iran, right? To whatever extent I believe that arguably the smallest threat to the trajectory of interest rates is yen, and maybe like I could argue that that's a stupid thought, right? But if we think this data is going to be weak, which we've been moving in that direction, so it's a reasonable conclusion. If we think bond yields are too high, if we think there's going to be peace, I think it all leads us to a question that we're going to have to bet on, which is, was a week and a half, call it 2 weeks of higher oil prices enough to trigger Fed tightening? Because that's what we're talking about, right? June inflation data was phenomenal. And it was phenomenal because oil prices were going down because we were moving towards peace. We want to think that July was bad for oil prices, and certainly July 31st was, that cut date. But early July, oil prices were great. It really was only about a week and a half. I mean, if you're with me, pull up a crude chart, right? And we do a 1-month chart on crude. July 10th, we were sitting at the low of the day was 70.77, right? We really didn't get to an 80 handle until the 16th. And by the way, by the 28th, we had dipped back into the 70s. So you're talking what, the 22nd to maybe the 25th, 26th, maybe the 20th to the 26th, where we saw like really hot oil prices. So was that enough to really impact? Yeah, go Phillies. Well, they should have made the deal too, Jenna. I heard that they didn't offer enough. So was that 10 days enough to really trigger a hawkish Fed? That's ultimately what we're betting on. And by the way, even if it was, and this is an if, by the time we get to the next Fed meeting next month, don't have one in August, let's just say we've got $50 a barrel. Does the Fed even care? Right? Because by the way, by the time we see July data, I'm not sure the Fed date, they might talk about it in Jackson Hole, but then do we get a really good for bonds August print? So I'm creeping towards 70-80% lock, right? But, and here's always the but, when did you float this borrower? So if you floated the borrower last week on Wednesday, you have a great story to tell. Bulls and bears make money, pigs get slaughtered. I like the conversation of, hey, it makes sense to lock here. If rates go down from here, we'll refinance you, versus, oh boy, we should have locked you. So I think if you've got a new floater, really almost 5 3/4 note rate and up, either A, I'm locking this dip, or B, I'm taking it day to day and I'm watching this like a hawk, because it could go the other way in a hurry. I think that if this is a long time floater, you're so far off sides that I don't know that this matters. I think you wait out the data, and I think that you've got until like Friday. It's hard to think that, certainly until we get to CPI, right? And perhaps you give this peace deal to a couple days to marinate. I certainly could see taking this day by day. That's probably what we're going to do. All eyes are on 10 o'clock ISM. That's the opening salvo for the month. And so if that number, although one could say maybe that GDP number was quasi on Thursday, but if we get a really good manufacturing number, even though that's probably the least consequential of the most consequential data points this week for the market, not necessarily for me. I'm somewhat emboldened by bond-friendly 10 o'clock data. So we'll see. Trade deadline at what, 6, I think it is? We'll see. Yankees need to make a couple more moves. I've got a weird feeling the Dodgers don't win this World Series. I just do. In an alternate universe, they lost both of the last 2 World Series. They certainly, could have and should have lost the last one. I mean, just, that home run from somebody that doesn't hit home runs. I mean, kind of an out away. I seem to think there was a strike call there that was missed. I don't remember. And, the Nestor Cortez thing, they play the games for a reason. And I think if the Yankees got everybody healthy and pulled the trigger on at least one other big deal, I think they need 2. I'd love to see them get Tatis and Miller, put Tatis at shortstop. But I think there's a path there if all the moons align. They do need a catcher, but I think Ben Rice is that answer, Frank. I think they put the guy Garcia Jr. at first. They put Ben Rice behind the plate only for the playoffs. They go to a 3-man rotation. That's how I'd manage this team. Desperation. They haven't figured it out yet. This team has been way too casual for my liking for the last 9 years. And I think they've got to go make or break. And that is 3-man rotation, put some studs in the bullpen, put Rice behind the plate, go get Tatis or Miller. And I think they beat the Dodgers. I think there are question marks there, quite honestly, that on the surface folks aren't thinking about. Not the least of which is, do all these pitchers get to October healthy for the Dodgers? Not wishing that, right? I'm just sort of speaking in fact. So really interesting week. Strap in. 6 o'clock. Let's see what's going to happen. I think that's why they made that deal. They're not saying something about Stanton or Judge. I hate to say. I hope I'm wrong about that. But we'll see. Bulls and Bears. Thanks for everybody joining live. Like I say, Wednesday is going to be early for the 8:15 ADP. Keep an eye on 10 o'clock ISM. Bulls and Bears make money. Pigs get slaughtered. Have a great day, guys.